Wow, what a week. I mean, we're ending it with an improvement, but lots of volatility. We're ending it with Deutsche Bank. It's just dominating the headlines. Essentially, remember last week we had the ECB. They raised their Fed fund rate 50 basis points because they thought it was more important to combat inflation versus worry about the banking turmoil that was going on. This was the same week we had the Bank of Susie being bailed out by UBS. We had our own Silicon Valley Bank, and there was a lot of confusion and what was going to happen. Essentially, Janet Yellen, Jerome Powell, they calmed the markets down. They went over how the FDIC, they do insure up to $250,000. Majority of people don't have this much money in their accounts, but these are big hitters in these smaller banks. And essentially they said, listen, you'll be made whole. Your deposits are safe. But this is now leading the markets to believe that not just the US central bank, but all central banks really need to slow down on what they're doing with their rate hikes moving into the future. So for the US, we were anticipating that May, we were going to have one more rate hike of 25 basis points. Now they're thinking it's going to be June, and that feels like light years away. We'll keep an eye on it. Other news that came in that helped a little bit is we had durable goods that came in. It was a little bit of a miss. We had jobless claims continue to come in under 200,000, which is a whole other topic we can go into another time. And then, of course, next week we get PCE. Now, this is the Fed's favorite measure of inflation, so I'll keep an eye on it. In the meantime, you guys be safe, and I'll talk to you soon.